All right, good morning, everyone. Glad to have you with us on our trading journey, exploration into the unknown, and we'll do it together. Today is Wednesday, July 22nd, 2026, Midsummer Day, and this is our audio edition to our daily trade strategy briefing, which everybody should have a link in the chat for. So please do check that out. To satisfy the regulators' requests and demands, you all know about the disclaimers. Risks with money you can afford to lose, past performance not indicative of future results, and all of that is found under NFA compliance rule 2-29C sub paragraph. So if you want to read the full details, there you go. All right, very good. So uh, what we'll do today is, again, since we gather together once a week, uh, pretty much this past week, the theme has been the same. The days have changed, but the themes have been the same. Basically, we've been in a multi-day range, and uh, given the summer rhythms, that appears to continue for us today. So what I've done here is I've outlined our most recent, or the market's most recent ranges, and some notes about each of the range and what potentially could unfold to change the current dynamics. One set, let me get my trusty pen. Okay, so what you see here is basically the past, 4 sessions, beginning with the previous cycle day one, and again today is a new cycle day one. And so what we've seen over the past week or so, we've seen an upper distribution profile. Let me just kind of bring that in a little bit. So we've seen this upper distribution up to about basically kind of from the 75, 60, 70, 80 area up through the 76 30s. And then we have this lower distribution area, right, which we're currently in roughly between the 74 70s, again up through about the 75 50 60 area. All right. So this is this zone here that I've marked out, key zone to clear and convert between the 75 50s and 80s. Right. And again, that kind of delineates the upper and lower distribution. So basically, there's two sets, right, of balance areas, if you will, right. And this zone kind of marks the transition, as this is where we got the decline last week from our cycle day three high up here into the prior cycle day one low. Okay, and so very simple. We get off cycle day one low. It retested cycle day two. We got to push up towards the 75 50 area. Just kind of outlining this again. All right, we had a retest of the cycle day one low, which was a successful test. Uh, End of cycle day two into cycle day three, and again we got our move yesterday, kind of a little bit two-step or zigzag type shape. Again, once again, kind of stalling out right at that 75 50 zone. Right. And then now coming into today, it is a normal cycle day one. What do I mean by normal? Typically, we would be looking for some magnitude of a decline for cycle day one. And indeed, that has occurred. The target zones that we had outlined in our daily trade strategy, 75 15s, okay, and then the average decline for a cycle day one measures 75 13, I think 50, if I'm not mistaken. right? So those have been fulfilled here. Bingo, check mark. Okay. Now, what does that mean for us? It just means that the average decline, range certainly has just been fulfilled. It doesn't imply that we're going to get a rally. It doesn't imply that there's further weakness. It's just, the overnight kind of drifted lower. And again, we're in these summer rhythms. All right. So the market's really kind of, just not really breaking out in any direction, but we are getting intra, range moves that are tradable. Okay. So, as long as the market kind of continues with fairly wide range activity. That gives, I mean, that's a trader's market, right? This is what I've been, uh, discussing in our room this week. It's been basically a trader's market, meaning, we don't have any big, huge directional moves, but we do have, kind of intra range moves. I mean, between 474.70 ish, right? Up to 75.50. I mean, there's plenty of room for us intraday, to pick something out of that, to be able to, take a little pieces out of that. Again, we're not looking to get the entire range of moves. That's, probably a high bar for most everybody, but we're able to get pieces, and that's really kind of what you're looking for. You're just looking to get pieces. All right. I learned many years ago, small wins add up. Right. Everybody wants the big move, catch the big 20, 30, 50, 100 pointer. But in reality, catching, consistent, fives, tens, five tens, can actually, accumulate perhaps much more consistently, frankly, because they are more consistent opportunities versus the big moves. So try to get little pieces out of them, and, you can manage the risk, obviously, as tight as you can, but again, allow yourself some flexibility with that. So this move down this morning or during the overnight here, right? What has it done? It's tested right now this prior pivot. So one of the key concepts, right, that I focus on quite a bit with our community, is identifying prior pivot levels. Okay, pivot levels are just simply the as far as how far the price has moved on a particular swing, and then it's reversed, right? And that leaves behind, a high or a low, right? So a high or a low pivot. And again, just as a quick review, what does the meaning, what does it imply, right, of a low? What's the implication of a low? What does that actually mean? The way I was taught back in the investment banking world, right, when I was learning to trade as a market maker, all right, that's essentially where the last seller sold. Yes, Oris has it here perfectly right, right? John as well. That's where the last seller sold. It is not necessarily where there's the greatest amount of demand, because we don't really know what the actual demand and supply equations are. In other words, we don't have a full read of, you know, um, full information of how many buyers are willing to buy at a certain level, and vice versa on the sell, right? But what we do have is we can measure to the point where, well, where has, if the market is trading lower, okay, who's forcing that price lower? Naturally, it's the sellers. So the sellers are in control of that movement until when? Until they're finished selling. Okay. Now, yes, on the way down, they are selling to, um, you know, responsive or passive buyers. So buyers are absorbing those sellers. That is true. But we don't know how aggressive the sellers are going to be until they finally, the market shows us that there are no further sellers. And then at that point, we can make a higher confidence determination that the last seller sold. And again, it's where the last seller sold. Think about what the participants that are ongoing. You got those that are selling actively. You got those that are buying actively, and then you have everybody else. So in many cases, the majority of people out there trading are in the category of everybody else. Why is that? Because if you're not one of the active participants, you're waiting to become an active participant. And in terms of, let's say we're looking to buy a pullback, and this works the same way as if we're looking to sell. We're looking to buy a pullback. When is the best opportunity to buy a pullback? Think about it. It's when there's no more sellers. Okay. When the market is showing us that the sellers are finally, at least in our best estimate, our read of the market at the time, that they're complete and buyers now have regained control. That's the best time for us. Not while it's going down into a level. Oh, I think this level is going to hold. It may, but let the market prove that to you, because we don't have the power to be able to stop it. So let the market collectively show us when it wants to stop it, and then the buyers return. That's probably the lowest, right? Yeah, exactly. Aura says it right here, right? That presents the best opportunity to buy. And vice versa, when you just reverse that situation for the sell. Wait for the buyers to complete, and then the sellers regain control. Okay, that's what I mean always about staying in alignment with the dominant force, right? If you're trying to, oh, I think I'm going to pick this low, I'm going to pick that low. Again, that's fine if that's the way you want to do it. But my suggestion has always been over the years. Again, the reason why I say that's firsthand experience, meaning I was a market maker. I was the one, working for the investment bank, but I was the one buying them on the way down. I was the one always selling them on the way up. It's not, if you have a bank account, right, credit line, that's one thing. But when you don't, and of course none of us here, has that. So we have to kind of think a little differently. Let the market show us how far it wants to go down or higher, and then get in. Okay. Again, yeah, you give up a little positioning, but you gain, much more by being in alignment, whoever the dominant, force is at the time. All right. So that's kind of the early lesson today. All right. If you want to take that away. And again, these zones, we're pretty much right in the middle of the market to begin our session. So I'm going to, classify this right now as neutral. We did complete the average decline, so there is a potential for the market now to move higher, should it want to do that. All right, and that's where we'll begin the day. Market's going to open in just a moment. Ring the bell, and let's have a great session. I will be on until 11:30 today, and stick around because Danny with an I will be coming on at the noontime hour. So let's have a good session, everybody. Feel free to ask questions, and let's just kind of stay focused here. Right, that's the skinny on the mini, and there's the bell. Dingity ding ding. Again, looking for more kind of two-sided action, I think, to begin with. But again, we'll let the market, dictate that. You can see VWAP relatively flat. And again, given the recent rhythms, I think we just need to stay in alignment with what the recent rhythms have been, which has been just kind of swinging back and forth. And let's see if the market is good to us today. After the close, you all should know anyways, we got Google earnings and Tesla to kick off the techs. So they'll be after the close. I don't have a dog in the race there at all on either of those. But again, always good to know what is on deck for everyone. All right. If we're looking for a sell up at the A10 area, 38-ish, give or take, could be an opportunity for popping a reversional trade. All right, we'll see. I like to let the market just kind of unfold naturally and take probes, then see where it goes from there. Right. So even though the cycle day one average decline projection has been fulfilled down at the 13s, again, keep in mind that is not the cycle day one low yet. Though it may be a current low, right? And I don't think it's actual low. Could be. Um, it's not the final cycle day one low. So, but we can still use it. Again, we can make an assumption that okay, the average decline has been fulfilled. Possibly, the rally begins. Okay, but again, keep in mind it's not the final low. All right, that is enabled. Right. I did get up into the A10 area there. All right, so again, some of you may have taken the zonal entry, and if you did, you're in good shape on that short from the A10. Mine just missed. It's amazing. Sometimes the market just kind of cuts it through like it's not even there, and then other days, you get a tick miss. You know. All right, so buyers have the ball basically um, on this push up. We'll just see how far they keep control. But right now, they do have ball control. Right, recent action has been kind of slow and grindy. And we'll see if that continues here. Sometimes rhythms clearly need to be patient. Soon, also in about a week or so, the students are going to go being back to school, so there's going to be a lot of vacations. August time is a big vacation period throughout the entire month. It used to always be kind of like the last 2 weeks, but frankly, it's the entire month. Right, August is just a huge vacation period, particularly for the big, decision makers, money managers, etc. So once the earnings pass by, because we're in earnings season now. Once these earnings go by, you're going to see a lot of money. Well, you won't see them actually, but what happens is a lot of money managers, okay, those decision makers, go on vacay. And yes, the market is still algorithmically driven, but keep in mind those algorithms. Somebody has to turn on the lights. Somebody has to, enable the algorithms to run various strategies. Same, exactly the same for the institutional players. Right? Yes, the trader on their desk will be the ones actually doing it, but it's at the direction, right? Because the traders work very closely with the managers, and so if the managers are away, you know, again, those algorithms, those strategies tend to not be as active. What does that mean for us? It just not really a whole lot, except for just being aware that things tend to get perhaps a little choppy and wonky during those periods. But again, for the most part of how we trade and what we look for, nothing changes. It's just more mindful of the bigger institutional players. But big earnings season on deck, and again, everybody's going to be present for that. And of course, you have the overseas geopolitical stuff that's always, a wild card when it comes to all this. All right, 35 is kind of chugging here. Again, buyers are still chipping away here, nibbling, not seeing any really hard reaction back to the downside yet. Yeah, I think it's still valid at this stage. Yeah, 38. Yeah, appears that way, right? In terms of some resistance, I guess that's what you're saying. Right now, it appears that way because certainly, no buyers, forced above that level yet. Yeah, no buyers forced above that level yet. So again, what I'm saying is when I don't like to use the term resistance or support. At least in my world, I've never, even when I was a market maker years ago, the investment banks, we never really used the term support and resistance. You know, um, that's like drawing a hard line in the sand. That it has to be resistance or it has to be support. And again, the way I was, reared in the business is not that way. Yes, I mean those are the easy terms, I suppose. And again, they're accepted terms. But frankly, okay, that right here, this is where the last buyer bought for the moment. Okay, for the moment. So based upon that, that's valid. All right, there's no buyers, at least on this move up above that level. But you can see here the buyers, I mean, and sellers are doing their thing together, right? There's some volume in there. So does that mean that it's reversing? No, it hasn't reversed yet. Think about this, right? Who brought it up here? The buyers, right? Who pushed it up to these levels? The buyers. Okay. So as such, the way again I was taught, years ago is that if the buyers are the ones that pushed it up here, the onus, right, is on them, right, to continue buying. But remember, as I said earlier, I don't know how much, we don't know how much supply is here, do we? We know that there is some supply because naturally there's volume trading there, but the buyers moved it higher. So right now the buyers are in control. Okay. They're currently in control. So the onus is on them, to keep absorbing. I call it kind of the Pac-Man effect, right? Pac-Man's got to keep buying them, eat up supply, you know, uh, whatever the supply is there until they run out of interest or they get filled. All right, so we'll see. Yeah, the idea of a Pac-Man. I mean, a lot of times the institutional players, right? They split their orders out and into very small pieces, right? As to so they so the market doesn't identify kind of that there's a big order out there. Yeah, they split them up quite a bit. I mean, I think the average trade size right now is like either two or three. You know, but again, notice what's happening here, right? So buyers pushed it up and there's no rejection, right? So if the price moves to a level and then kind of laterally goes sideways, right? People call that in this case would be a bull flag or a lateral flag, right? But bullish, right? So this level is being accepted, right? And now they moved it higher because whatever the supply that was there no longer there. They were able to, you know, eat through that supply, okay, until whatever the next level is, right? So again, when prices move to a level, one of the things we want to do is measure whether or not, it's getting rejected, in short order, or in this instance, the price is staying there after the move up. And again, for me, that the way I've been taught to read that is that's acceptance of those prices because the buyers want to buy them. So you can't say, well, I'm going to short them against the buyers that want to buy them until there's evidence that the sellers, begin to take control. So, it's always a tough sled when when you're shorting into buying or vice versa, buying into persistent selling, you know. So again, from an algorithmic standpoint, our ATA is just triggering at a particular level. And, again, if the rhythms are such that, we can get rotation, then our algorithms work very, very well. When there's little rotation and it kind of, chugs along, it's a bit more difficult for at least our strategies. Our strategies kind of depend upon, good rotation, movement. Right? So that's kind of part of inherent in our strategy. So they work best anyways with a kind of nice rotational movement. These grindy movements are much more challenging because we're not getting the responsive moves that we're looking for with that. All right. Good question. I don't know about round numbers. I mean, there's always been kind of I don't know how true it is, but they always say, the roundy, you know, right, for round numbers, tend to attract uh, moves. I don't have any evidence of that, to be honest with you. I know there's, it's kind of a somewhat of a generally loosely accepted concept about the market likes to move to round numbers, psychological, effect. It could very well be. I just don't have it. I personally don't have any evidence of it. Same thing as, the old, adage of, sell in May and go away. I've always challenged that, like, why? You know, I mean, I don't know. I guess the market just needs to kind of hang its hat on something, you know. Most of what at least in my world, over the years, most of all the, cliches of the market, I've never ascribed to as a belief. Yeah, genuine Wall Street gibberish. You're right, JB. I've just never, kind of, oh, sell in May and go away. Like, why? You know? All right. Again, this past week or so, these 40s, again, into the 50s, and of course, that bigger zone up through the 80s or so. These 40s, 45s, 50s, we've seen all week that's been, you know, they, they've continued to make attempts to get through this area. And they continue to find some level of larger supply resisting the buying. But, the buyers are persistent, you know. Again, that's part of the, accumulation distribution, phase. And you don't really know if it's accumulation or distribution till, after the fact. But all right, we get a move down here. It's starting to kind of settle back down. We did get a flip out, what we call a flip out on our ATR short there, and that's when the ATR flips from long to short. It's an automatic stop out, so it actually limits the loss on the trade. So not too bad. All right, so we get a little dip, but buyers are still persistent on the dip. Yeah, well, accumulation distribution, Wyckoff is obviously a big, the study of Wyckoff goes into greater detail about that type of stuff. I'm a Wyckoff-ian. I've learned that over the years. I take pieces of it. I think my approach overall is just really kind of a pieces of a lot of different concepts that I've stitched together for, you know, like uh, call it the call it the isolation approach, if you will. Right, I'm isolating certain aspects of various, uh, studies and concepts, and then putting them together into what works for me. What I try to do with our folks, in our community is, the new folks that come in, and everybody, but the new folks, is, you want to learn what we do, how we do things, and you want to, kind of get to those trades, as quickly as possible, right? So I always try to fast track everybody to, the more kind of focus on, certain things first. Um, Kind of the analogy I give is like, music theory. You want to play piano or you want to play guitar or whatever it is, and I want to get you to play the guitar. I can get you to play the I can get you to play the guitar in the initial, session, right? A song actually, right? Without knowing any music theory whatsoever, because the study of music theory is, can get pretty detailed, and you don't want to, people just, hey, I want to play. The music theory can come later. So like with trading, I want to get you to trade first, and then all the details about, say, Wyckoff and profiling and all the other, aspects of trading, the markets, which is more, much more analytical, um, is comes first. I mean, comes later. So you don't want to start studying all those different things before you start trading. Just let me learn to trade. Let me show me a couple ideas or a couple, setups. Let me get you to, you know, and then that kind of helps drive you, like, the momentum and the enthusiasm. And yeah, I'll learn some of that other stuff later on, as the years go on. As the years go on, you know. All right, so a couple things here, as this is unfolding. We had, again, the A10 got stopped out, got what we call flipped out. All right, so minor raspberry there. On the opposite side, we have what we call our A4, which is the middle lower window, and that triggered along. So if you're staying in alignment with the current directional lean, which is what, right? You see the flow of the river here. See these bands with the lines in it? I refer to that as the river. Okay, and those equidistant lines are like the current, right, of a river, and so I refer to that as, kind of the river. So what's the flow of the river showing, right? Certainly upwards there to the right, and so what happens, right? Prices kind of moved into that river, and what's the current of the river doing, right? So think about price. Kind of the way I describe is, think about price as the boat, right? The individual boat, and so the boat kind of drifts down into the river current, and what's the current going to do? It's gonna push the boat, you know, further to the outside. So that's kind of why I have those moving average bands there. So a pullback into that river area, okay, offers us opportunity, right, to get in alignment with the buyers. which we know are dominant right now. Kind of a simple concept, not that difficult, right? So we had pullback into that area. We were able to get long. Again, that short against the 810 didn't play out. All right, so staying in alignment. And again, this slow, grindy action, persistent buyers, are they not? You need to recognize that. This is what I always continue to try to do with how I describe the action. We got, Pac-Man is still buying. That's acceptance. They're pushing higher. They're coming back. They're still buying. Okay. And again, if you can, successfully read that, then you're able to get in alignment, right, with that A4. Or we also had a discount here, right, in this area here. So that signal, right, is coming off this deep move and this move back up. So move back, and again, there's your signal for a discount. The discount is a long in an uptrend condition. So a discount is by definition weakness in price, but weakness in price in an upward directional flow, i.e., a pullback. Okay. Some people also may refer to that as a bull flag, right? Pattern. That's fine too. But the key is, at what point has the market pulled back enough before it's more likely to move higher? And again, our CCI gives us that signal very accurately. So, all right, so again, we're long here against the that pullback, right? A4, and we got 2 scale outs, so that allows me to move my stop to entry, and then we'll see how the remaining. All right, so let me zoom in here for the active trade, right? So we can pick that up on the recording and the stream. All right, so again, and pull back into the ATR zone, right? Triggers on what we call the right side pivot rule. And there's your trigger. First scale to get risk free, and then multi scales take profits for. All right, and now additionally is going to be have 3 take profits. So now the market simply is, on its way higher. Now the goal here, perhaps up towards the 55s. That's our first upside objective, by the way, based upon the daily trade strategy. All right, so 75, 55s is the next objective. Everybody getting that read okay? How I've kind of walked through that process? If you allow yourself to just let the market show you what it wants to do and not try to impose what you think it should be doing, all right, you're gonna be, your level of success, right, is going to improve dramatically. Just let the market show you. Cycle high alert. Yeah, Nicholas and I yesterday were talking about things exactly this way, right, Nicholas? Right? Yeah. So now in terms of management of this particular long, we have our stop, at entry, break even after our three take profit. So now I'm basically, um, for the most part, kind of using the A4 ATR as a uh, management tool now. The idea of the final contract, final, tranche that you have, your lot, is I'm willing to give this up. Meaning that if the market comes back down and it shifts the A4 ATR, right, we're going to get what's called a flip out. Okay, it's going to automatically flip out, get stopped out, and I'm willing to give that one up. Right. So I've always gotten questions. Well, I could have sold them higher. Yes, you could have. But what happens if you decide to arbitrarily say, oh, okay, I'm going to sell them here at 50s because it's higher than my last sale, 45. So okay, I want to sell every 5 points, say. Okay, could you do that? Sure, you could do that, right? But then if after you've completed your trade and you're very pleased with that trade, if that market goes another 10 or 15 points, you should not get mad, right? You should not get upset because if you followed your plan the way you designed it, then that's how you want to measure the success of that trade. But if you decide, on that final contract, well, I'm willing to give that up because I had three take profits already out of the four contracts and I hit all three targets. The idea of the fourth contract is if we get a runner, right? If we get a real good runner, right? That ATR4, that white line that you see there, A4, is going to help keep us in that trade for as long as it runs. How do we know that this time, this doesn't run well past that prior high? Does anybody know that? Nobody know that, right? So if you're willing to accept that final contract, one, it should never hurt you, right? So I have it now at break even, right? So so it should never hurt me, and I'm willing to give that back. So it's all about whether what you're willing to do or not do, what it comes down to, right? If you're not willing to give it back, and you want to take the trade, oh, let's just say you want to take the 55s here, then follow your plan. But if it goes to 65s later on and it never would have stopped you out, you can't get upset about that. So for me, what I'm trying to do with these is I get my first three take profits off the trade, and then I'm just always trying to catch that runner. And as prices continue to go higher as they are, now you see that A4 shifting higher. Okay. What I can do here now is I can bring my stop from entry up to where the A4 is, or this lower pivot. So in other words, what I'll do here is like this. I'll raise it up here and I'll put my stop right there. So now I've locked in okay, so I have an automatic stop that just moves up after all right. So now I've locked in, my entry was where 39s. I've locked in 49s basically. All right. So another $500 on that contract. So I've locked that in. Now it's just going to follow. If the market wants to continue to move higher, it's just going to, I'm willing to get flipped out here at 48, whatever, 48.50 or so. If it wants to go another 10 points, all right, I'll just trail it higher. So Oris, is there a benefit to locking in at a break-even price to increase the chance of a runner moving higher? So the way I'm doing this is I'm not locking it in after the very first entry. Excuse me, take profit. I don't want to move my stop too quickly because remember this line down here, okay, this blue line down here, that's my break-even line. Okay, so once I start getting risk-free, okay, that blue line is say somewhere over here, and that's where my stop will be at the full break even. In other words, I can't lose anything on the trade. As the market kind of takes additional profit out, take profit levels, okay, that blue line, right, moves lower. Okay, so again, I know exactly where my final, my overall break even of the trade is. But once I've taken the second or third take profit out, when it's hit those target levels, okay, up here. Now I can move my stop to the break even, which is entry. So at that point, I don't want ever for the market to take me out. Now I have an automatic move up here to the 48.50s or so. So there it is. Boom. There's my final takeout. Okay, based upon the rules of this particular strategy that I'm running. Right. I could have gotten higher there if I wanted. That again, that's the option, right? Of how you want to handle it. All right, so that trade is out and done. Right, think more conceptually on how you want to handle a particular trade, and then set up your parameters. And then what you need to do, and you always need to do this, is you need to back test it. What's the frequencies, distribution? Where are the higher levels for take profits on a particular trade, and so forth. We've gone over that many, many times in the past. All right. Again, getting above the prior high, no surprise if the market kind of pulls back a little bit. Again, that was an objective. So nice move and no complaints. So everybody follow along with that in the pit room, the discussion on that particular trade. That's one of our core trades. Always nice when it unfolds the way we like it to. All right, so now pull back into this area. This holds for a move back up to 55s or so. All right, so we got another little discount area working here for us. Again, right up to those key 55 area. Right, and this has been kind of rhythms over the past week, kind of moving down to the low end of the range and then eventually moving back up to the upper end of the range. Yeah, very nice trade, Nicholas. No problem. Very nice. All right, so now we're just basically back into what we refer to as observation mode. It looks like we may have an A4 shift here to the sell, which will then make our stop out look even better. Okay, let's take a look at this closer now. You see what's happening on that trade? Okay, you see the A4 here, right here, right? It's beginning to flip, okay? Right there it has, it's completed. So now there's a flip, all right, the A4. So it was bullish, now it's flipped to bearish mode, right? Now we took our trade out, okay, in on the management of it, actually very nicely, right? And so the idea there is, again, following your rules, your trade rules. And if I was still in this trade, right, it would have gotten stopped out, on the flip out, right? But the way I have the management rules are, we ended up getting a nice exit on that. Okay, so again, and the only thing that we gave up, right, was this, right? The distance between that stop out and the high, right? That's really, and again, we would have probably never gotten the high anyways, right? That's kind of almost impossible to get, right? You could have gotten 54s, or 55s, but what is that? Maybe 5, 6, maybe 6 points or so that I probably gave up on that. Not a big deal. Okay. So again, the idea of this and the takeaway is you have sets of rules, you follow them, and you let the trade play out. You have management rules, you follow them. Okay. So that's what you have to do. I know it's not exciting. It may not be exciting, but it works. All right, John South probably took the BLT short, right? Let's see if that works out for John. And yes, 46.75. All right, very nice. Let's see if that works out. So you're already in the money on that one. Very nice so far. Aha. And the twist, Delphine says the turn at 35 minutes after the opening. There you go. Right. Yeah. Yeah. It's usually that, 10 o'clock, 10:05, 10. I think it was, I think on our timing, it's like 10:08 to 10:12 on our time cycle sheet that we have that we passed out a week or two ago. All right. So our time zones. Yeah. I think it's 08 to 12s, right? Is that what it's saying on the sheet? Is that what it's saying? Can you confirm that, Delphine? I'm pretty sure it's like 08 to 12 time. So right in that time zone. So what Delphine is saying is after the first 30 minutes of the opening, we usually get price usually responds backward, the opposite side. So if it's moving up after the first 30 minutes, usually like 10:05 through like 10:12 ish, the market tends to at least attempt to reverse. Okay, great. Yeah, Delphine just confirms. Yeah, it's 10:08 to 10:12 on my document, on the PTG document. Right. So let me. Yeah. All right. That's good. So 10:08, 10:12 is a time slot for potential reversal. Reversal of the moon doesn't mean it's going all the way down again. It's just a reversal of the current move to some degree. And that occurred, oh my goodness, 10:05, 10:06, right? And that's one of Delphine's core plays, if I'm not mistaken. You look to take the opposite trade at that time period. And okay, great. She says yes, correct. Very nice, very nice. So you guys make a note of that. I mean, again, it's what others are doing, what they look at. Check that out. Do some study on it. You know, thank you for sharing that, by the way, Delphine. Right. And again, the thing about it is, I've always learned is, I can give, yeah, high percentage trade there, right? So here's the thing, like Delphine takes the counter trade, right, or looking for the reversal, okay, at roughly the 10:05, right? So we have a time zone on our work, and again, it's all in the members area, um, between 10:08 and 10:12. So again, just be a little bit flexible on the actual time. But in that period, right? What you're looking for after the first 30 minutes, you're looking for some sort of counter move, okay? Some sort of tradable counter move. Now, again, that's one of Delphine's core plays that she has uncovered over the years, okay? But that play is can be universal for everybody, right? And so, Delphine has shared that with us. What she looks for is one of her plays, core plays. And so, if she does that, what does that mean? That means everybody could do it. There's nothing. The market is so thick, anyways. It's not gonna, you know, what she's sharing doesn't detract from, the performance of something like that, right? So maybe worthwhile checking into that. Yeah, JB had 90605 on the tick chart. Yeah, I'm looking at it. Actually, what's interesting for us is um, we also had what's referred to as a 200 extreme and a cycle turn right there. Okay, where that white star is. Right, so that was right there at about exactly what JV had about oh 06s, oh 05s, oh 06s. So that was very interesting. Yeah, Central Time. I mean, yeah, I had 10:06, 10:05, 10:06. Yep, absolutely. Yeah, so Delphine says, in fact, we had an opening drive and they like to recheck the opening. Yeah, absolutely. Don't they? All right, we also have a premium here. All right, you can see on our screen, main screen here on the right, premium short. In other words, we get that move, we got first pullback, all right, back up, and it triggered a short. Now on the other strategy here, the A10. Now again, that was on the long side at the moment. All right, so on that deep pullback to the A10 area, all right, that strategy triggers long. So again, when we trade these strategies, we trade them independently, right? And I go, that can be confusing on for some folks. Like, well, there's one long, one short. Again, they're independent strategies. So we trade each strategy, on its own merit. And of course, keep in mind one thing, if you're trading any of these prop accounts, right, there's the hedging rule, right? In other words, you can't trade a long and one, a long position in a short position in the same account. You're going to get busted if you do, right? The hedge police is going to get you, right? So it has to be two separate, distinct accounts. But for what we do here, it's primarily for demonstration purposes. right, across the spectrum of various strategies. So, Oris, are you inferring the dependency? Take the A4 only when it's aligned with the A10? Yeah, so the A10 is our core ATR, structural ATR. The A4 tends to be, obviously the faster, more sensitive ATR. Um, we have we can combine those in terms of like taking the A4 when it's aligned with the A10. That can be configured, right? Um, oh yeah, so if you would have taken, okay, so I understand. So if you could take an A10 long and you're in that long and it's working for you, right? And then take an A4 exit when that flips. Yeah, you can do a lot. Yeah, you can do combinations like that. I mean, there's no question. I mean, in other words, what Oris is saying is, I want to take an A10 directional, play, and as long as the A4 stays aligned with that play, stay in it, and when the A4 flips, right, exit out of the A10. Yeah. To avoid the hedging prohibition. Yeah, again, the only hedging prohibition there is, it's just the same account. Actually, it's the same email address, right? It's just the same email address. So even if you have two separate accounts, right? So if you have A10 in one say $50,000 account, you get an A4 in another $50,000 account, same email address, right, associated with it. So that is, you can't have one long short in that case. Right? But what you can do is you can go long, an A10 and and exit the A10 long if you're using an A4, kind of has that criteria. Just can't have opposite positions. That's all. That's the problem. You can if you have, again, here's the thing about the hedging thing, anyways. Even if you had a separate email address, for yourself or somebody else, and you were controlling it, I mean, bottom line is, you're either going to be long or you're going to be short. Which you're playing. Why would you want to even begin to hedge? Both what the kind of the stuff that we do, right? Yeah. So eh, what you would need to do on any of that stuff that you're thinking about, you're going to need to, number one, model it, and then you're going to just simply need to go back and back test in a large. Maybe you start with a look for 25 or 50 samples to see if there's any efficacy even to that, right? If it produces any type of profitability out of that. And then if it does, if you find that there is some efficacy, then you do a larger sample, like you start going, up to 100 trades, 200 trades, 300, and really kind of get a very deep back test of, that. And that goes with any idea. And then see what type of results you get from that. See what it's kind of showing you. I'm basically of the, you know, uh, school of just kind of staying in alignment, right? So two plays here, right? Let's just talk about this for a moment. Two different type of plays here, kind of in the same, similar but different. So prices moved up here to the prior high, right? 54s. So let's take this one for instance, right? Goes moves up to 54s. Again, one of our plays is on this discount, which is typically a long play. In this particular scenario, we actually use it as a short play, right? So we're actually going to use it as a short play. So that's one, we call that the BLT, right? And that would be a short play. Now, typically that would be a long, but in this case, it's a short. And then the opposite one, the next one was the first pullback, right over here. Okay, following a shift. So the market did shift here, and we got a first pullback. So you play that short, okay? And basically, what you're doing is you're playing short against the high, not at the high, against the high. Okay, and those would be the two core plays. And of course, if we throw in, Delphine's, 1005, reversal structure, that kind of really aligns super well today, didn't it? Between tagging the prior high, getting the time period, and then getting reversal plays. I mean, you couldn't create that scenario well enough that as it unfolded today, right? So again, there's a number of different plays that you can, which play do you use? Yeah, again, like I said, I'm from the school of I'm a simple directional play. I don't try to complicate it with too many dependencies because, again, once you start adding too many dependencies or many dependencies, and it can deteriorate, performance because it needs to have a certain dependency, needs to have a certain alignment, things like that. And sometimes the best alignment is just the simplest, right? Occam's razor, right? Anybody know Occam's razor? Go look it up. Occam's razor, right? The simplest answer is the best. It's typically going to be the most accurate. So the way I look at it is, it's kind of like the simplest trade or the easiest structure is typically the best structure. You know, and again, going against directional moves is inherently hazardous. Yeah. All right, guys, I'm going to take just a 5-minute break here, get some refreshments, and I'll be back. All right, guys, back with you here. All right, so we're still short of the premium play. And again, we had our first take profit off of that, first pullback premium, and stop is at break even on that one. And we're looking for roughly, what's the price target on that? 31 quarters, getting close. Another 2 points will get us there on that active short. Cycle. What's next? What is the next turn, Delphine? May I ask? 35.45. Okay, let me take a look. I think we have something similar. Oh yes, we do. Okay, so let me pull up our trade zones that we have in our toolbox. All right, so this is okay. So trade zone one here was all right, 950 to 1005. Okay, that's the first one. So the second trade zone was this one here, 1008 to 1012, and then 35 to 45. All right, so we have similar zones there. Okay, so that's our next time zone area. All right, that we have outlined. So very nice, very nice. Similar zones. All right, there we go. We got our second take profit there at 31 quarters on the premium. So that fulfilled that particular trade. Very nice. So we've had a couple decent trades here today so far. A couple small stop outs, but the winners covered those. And this is what I was saying during the morning briefing, that even though, prices have been stuck kind of in this wider range, within the context of the range intraday, there's decent enough swings, to be able to catch, some of these decent moves, right? And that's all what we need. We just need, like I said, just pieces, of it. Now being in the middle here, I don't like the diddle in the middle, as they say. Not my favorite. Um, but right now the lean is contextually down, right? We can pretty see that. Again, for those of you, particularly in the the pit community, right? Um, I always kind of get the question about, like, well, how do you know what the lean is? How can I have confidence, of a direction, right? So for our purposes and what we do is again, we talk about this, our flow of the river, these EMAs on this particular, uh, time period. And for us, again, a lot of it, comes down to, you can see the flow of the river to the upside, right? So we want to stay in alignment with that flow of the river. When that flow of the river shifts, as it did here, okay, what's the goal now? Stay in alignment with the river. I don't ask why. I don't ask to, what's that reason? Just staying in alignment with the river. And then, the market will offer us an opportunity, most cases, to get in alignment with that in an efficient manner. I'm not trying to guess whether or not the market's going to hold at VWAP. Yeah, the VWAP held a little bit there, right? That would be anticipated. Doesn't mean it has to hold, but that would be anticipated. Prices reach up to a key level, i.e., prior high. What would be anticipated, right? Some counter move of sorts. But in all of that, you can anticipate those things and identify those particular areas of inflection. But the simple goal is to stay in alignment and try to catch a first, pullback type entry in that alignment. Sounds simple, but it does take some conscious effort. But once you're able to embrace that, things could change for you. Particularly if you've been struggling, like, you know, just wait to get in that first alignment. All right, so now we're basically right around VWAP. Again, the don't have anything new trade at the moment, so we'll just get into continue our observation mode. Yeah, John says 10:45 time zone. Again, that's Eastern time. And look what happened to the direction. There's your 10:45, spot on. Uh, there's your 10:45 time right there. It's pretty neat. We got a little directional bounce back up. All right. So just sitting around here at the VWAP, don't really have anything additional at the moment. Oh, good question. Got a question from Morris. Does PTG prefer standard and or anchored VWAP? Everybody's familiar with anchored VWAPs? Yes, no? Okay. So I was just talking to Danny about this yesterday. Okay. So basically, you have everybody should be familiar with the VWAP of the day, right? The weighted price of the day. And so that's what's typically on everybody's chart. You should, if you don't have it, you should probably have it on there. But that's basically the anchor, and this is that what this white kind of crosses on our chart here represent. Okay, so in terms of an anchored VWAP, right? The anchored VWAP calculation is the exact same, but the difference is you can place the starting point of an anchored VWAP, i.e., the term anchor. You're anchoring it from whatever price point you want on the chart, whatever you want to measure. Okay. So the idea then is, um, given that the opening is the core anchor for the day, for the daily VWAP, So I'll give you a little bit of a background. When I was market maker years back, I would receive an order, customer order, say from a big institutional player, wants to, let's say, whatever, wants to buy or sell, whatever the case may be. But it's not at the beginning or before the opening. It's sometime throughout the course of the day. So as a result of that, okay, um, what was required of me was the core instructions were meet or beat the VWAP. In other words, their average price, right? I'm anchored actually to the VWAP, but not the VWAP from the beginning of the day because that makes no sense since I received the order well after the beginning of the day. So there's no way I could have ever participated, right? So everybody following that scenario. So what I would typically do, and again, I used an anchored VWAP, years back, right? Um, so let's just say, pick a time here or whatever the case may be, right? Pick a time. I received, let's say I received on this bar, this wide bar right here at 11:05 yesterday's. I received an order to buy. So what I would do is I would take my anchored VWAP, right, and place it on that bar. And we would use the midpoint of the bar time period, or actually it was actually at the exact time period that I time stamped it. Okay, because everything was time stamped. So for our purposes here, this defaults to the midpoint of that particular bar, and basically the concept's the same. So then what would happen is from that point on, okay, my job was to, as prices were moving higher, okay, we had to, by the end of the order, however long that took, we had to be within the vicinity of that VWAP for an average price for that customer. Okay, so you notice here this anchored VWAP that I'm showing is different, right, than the core one for the day. Why? Because it's at a different starting time. So that's what I would do as working customer order. This was years back when I was market maker working for investment banks. So as the market started going up, I needed to participate. I needed to be buying, right? And then if it gets too far away from the VWAP, I would stop buying. Give it a little bit of time for the price to again pull back, right? So as it pulled back into near to the VWAP that I'm using, I begin buying again. Why? Because I'm getting close to that average. So I need to have my average somewhere around that core VWAP. So that will just kind of continue on and on and on. So let's just say you can see here the price moved way higher away from that VWAP, right? By 1 o'clock. Up there at those highs, I may be buying a little bit, but I'm not being that aggressive to buy. But in a way, I still need to buy, because I don't know how far that's going to continue to go. So I'm buying a little bit, but I'm very, relative to when I first started buying, I'm buying very little, relatively speaking. And then eventually, when the price does come back down, if it does come back down, right, as it did over here. So as in this example, it gets back down to the VWAP. Now I'm very much aggressively buying, okay, down in here because I didn't buy a whole lot when it was far away from the VWAP, but when it came back to the VWAP, I needed to buy as much as I possibly could. Right. And as the day would be unfolding towards the close, I would be very aggressive to buy whatever I needed to buy to complete the order. That makes sense to everybody? So that's for me when I was a market maker years ago. And so but as a independent trader, I don't use it that way because I'm not working any customer orders except my own. So what I do for that is I'm placing the anchor many times at a particular high or a low. So let's take today's activity for instance. Okay, so what can we do here? So you see the normal VWAP, the white crosses, that's from the opening 5-minute bar, right? Now, what I can do is take the highest bar here and anchor the VWAP. Very simple to do, right? Most platforms have it, Sierra Chart has it. And then the idea there is if I'm shorting off of those highs, I want to know from what's happening here is everything to the right of that anchor point, right, is valid for all the trades. Anything to the left of it is not included. Okay. So the idea is all the volume that's taking place, right, to the right hand side of that anchor point, that's what matters. So what it does is what we're seeing here is we're seeing the VWAP, right, from all that selling, what's the average weighted price of all this selling, right? So the idea then is to use that as a reference, right, for uh, from a particular point. So let's just say right now, let's go here and say, okay, I'm going to anchor it from the low now. So you anchor it from the low, right? So from that low bar, 1, 2, 3 bars here, 4 bars, what's the average price of all this trade from the to the right hand of that, right? These 4 bars. Right now, it's the average price of all this is about, I don't know, 35s. Okay. So then what's the idea of using it this way? The idea is if price comes back down, okay, wherever that average, whether the VWAP price is, I'm looking for that then to become an area or a zone of a response. Because those that bought it beginning from this bar, right, everything to the right of it, that's all the volume that's included in that VWAP. So it's just what it is it's an alternative way of looking at what's happening off of a key low, perhaps what's happening off of a key high. Okay, that can be useful to somebody. It's just a way of saying, well, everybody that bought, from this point, what's their average cost? All the trades. What's the average cost of all of those trades? The average price, right? And I think that's still good, very good to knowledge to know because as this thing begins to unfold, right, you'll have an active VWAP. Now the VWAP, the daily VWAP here, which is this right here, may not be as I mean, it's still a reference point for all the trades throughout the day. But what you're asking by using an anchored VWAP is what's the VWAP from a specific point? That could be valuable to somebody out there. May not be valuable to you, you've maybe never used it before, but it could be valuable to get some perspective on, like for instance, you could do one up here, and you could do, you could do put two, one from the high, one from the low, see where where they merge. Sometimes that can, give you some opportunity. There's so many different ways of kind of incorporating an anchored VWAP that again the world is wide open to you in that case, right? It's not predictive. It's just it's a metric of what has happened from a particular point. Does that help, Boris? That's basically which one do I prefer? I use them both. I don't really have a specific preference. They're used for, lots of times I'll use the core daily VWAP just as a specific reference. If I'm taking a trade coming off the low or a high, if I'm engaging from a particular point, remember now I'm working my own order, so I want to see what's the average weighted price from my entry, and that could help me, maintain my position. Hey, the weighted price is moving up, and I'm in good shape. Maybe I'm lower than the average price for that, for those periods. So I may decide to, okay, that's working for me quite well. All right, so that's the idea of the anchored VWAP. Good question. Thanks, Ars. All right, we had a 10:45 time zone there. Again, actually created the low pivot beautifully, and then now we got another reshift back to the upside. So we got some pretty decent rotation intraday. So for you guys, again, however you're trading your plan, there's decent, at least there's some decent rotation going on for the movements today. We do have a short of 810. Let's see if this one plays out. It hasn't been, it's been wonky lately. Let's see if this one can play out. Cycle high alert. Cycle high alert. All right. No, 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 it's not the confirmation. All right. No. Yeah, the no. The one in the lower panel and the A4 in the lower panel, the A4 in the upper panel here, they're the same. I'm just using that A4 as a reference with the A10. But yeah, it's not necessarily a confirmation. But to your point earlier, Oris, if let's just say the short here on the A10 was playing out and we started getting a pretty good decline, like a trend type of decline, the A4 will definitely shift to a bearish condition. Okay, then you can actually use the A4 at that point, to your point earlier about using it as a management tool for the A10 short. If I understood you correctly before, yeah, you could definitely do that. But it's not necessarily a trigger or anything for it. And to Delphine's comment earlier regarding the 30-minute or 35-minute reversal at 10:05, okay, she said earlier that in fact we have an opening drive and they like to recheck the opening, right? So Delphine wins the Cupid Award today. Okay, look at this, right? Again, let me just repeat that. She said that we had an opening drive and then they like to recheck the opening. So here's your 10:05 reversal. And what did the market do actually? Right now we have opening range midpoint here, but what did it do? It liked to check the opening, as Delphine said. Yeah, who are they? The market makers, whoever they are. But again, the market likes to recheck, I suppose, right? The opening, as she says. So very nice. All right. So it actually rechecked it. And then here we are back again at the 50s. This is, by the way, very similar patterns that we've gotten in the past here. All right, we've gotten these kind of reversal plays. So very nice. All right, so I have about 15 minutes left to our session here today. And let me know if you have any questions. But pretty much, I think we'll be heading out soon. You had some decent trades, also some educational material here for you to think about. Again, Delphine wins our Cupid Award today for the 30-minute reversal to check the opening. So congratulations, Delphine. Hey, Manny. Good morning. Manny's in Tennessee. Which baseball tourney do you got going on in Tennessee? The Alliance Fast Pitch National. Manny, in that age group, what is about the fastest pitch speed? Have any idea? Really, 65, 70 miles, 65, 67. Huh? That's pretty decent. Sweet. Yeah, Nicholas says same structure from the previous buy response level. Yeah, we've had these similar patterns that have been shaping up. Yeah, Manny's continuation long from the 30-ish area. Again, we get that move down to right into that 1045 low pivot, and then we get a nice shift, a bull stacker, or even a BLT, reversal BLT type trade was on deck as well. Let's see, where's our arrow? That's at this level here. So I had another nice, in this case, it was a BLT long trade coming off that low. A little bit for everybody today. ES discount turbo. All right, on the verge of trying to push through these 50s again, 50, 55s. Can they do it this time? I think they're going to try. Cycle high alert. All right, we have a discount long right at the edge here. Let's see if they can punch it through. Punch it through. Punch it through. We got about 5 minutes left on. Let's go out with the last trade here. Let's make it a good one. All right. Take profit one, 57.50. Come on, you're very, very close. Cycle high. Boom, there it is. All right, 57.50. Take profit one on that discount long. All right, stop. Auto stop goes to break even, and this is going to be our last trade for this session. But we're in good shape. All right, the next level, if it gets it, is up at 63s. And based upon our daily trade strategy, we have 55, 65s also on deck for targets. So check out the daily trade strategy for that. So our targets are nicely getting filled. Trades have been working out pretty well today. Okay, so we're in line. We're in alignment with the dominant direction, which is our core premise. And again, we're looking at that 63 as our next take profit. Yep. You also have the D level money box on deck for you guys looking to trade the D level money box levels. That's at 65, which matches one of our targets, by the way. There it is on the left-hand chart. Cycle high. All right, we're going to start winding it up. We got about a 90 seconds or so. We're going to wind it up here at 11:30. Again, I hope everybody had a good session this morning. Follow along with the script. I think the script played out pretty well. And we did get some trades in on both sides, long and short. All right, I will be around for the remainder of the day. I got a few meetings this afternoon, and we'll continue on with those. And so, have a good rest of your day, everyone. Thank you for your attendance and questions. Always helps keep the engagement going and the educational value high. Steve, I'll post the time zone sheets link for everybody in just a moment. All right. Everybody stick around. Get some refreshments in about 30 minutes at noon. Danny with an I is coming on for her segment, and I'm sure she'll have some interesting things to work with for you. So thanks again, everyone, and we'll check in with you a bit later on.